Almost every business owner thinks, we don't really have commercial auto exposure because we don't own company vehicles. The problem is that's usually wrong. If one employee runs to the bank in their own car, if a salesperson rents a vehicle at the airport, or if your volunteers drive as part of your mission, your business may already have hired and non-owned auto exposure. In this video, I'll show you how to think about that risk when it starts becoming a serious problem and how to know whether your insurance is actually protecting you. Before we talk about the insurance itself, we need to answer a question that surprises a lot of business owners. Why would a business get sued when it doesn't even own the vehicle? Most people assume the driver's insurance handles everything and that the business has nothing to worry about. But legally, that's often not how it works. If someone is driving as part of their job, even if they are using their own vehicle, the business can still be brought into the lawsuit because the driving was done on behalf of the business. Once you understand that idea, hired and non-owned auto insurance suddenly makes a lot more sense because it becomes a lot easier to understand why some businesses would have very little exposure while others would have a tremendous amount. So let's start with the lowest level of hired and non-owned auto insurance exposure. And the interesting thing is, almost every business has it. You might think, well, none of my employees drive for work. But if you really stop and think about it, that's probably not true. Maybe someone runs to the bank to make a deposit. Maybe they pick up lunch for a meeting. Maybe a salesperson drives their personal vehicle to the airport before flying out to meet a customer. Even if it only happens a handful of times a year, they're still using their personal vehicle for a business purpose. That's really the key idea. They don't have to be a delivery driver or spend 8 hours a day behind the wheel. The simple act of driving on behalf of the business creates hired and non-owned auto exposure. And this is where a lot of business owners get caught off guard. They assume that because it's the employee's car, it's only the employee's problem if something goes wrong. But that's not actually how it works. If an employee is acting on behalf of the business when an accident happens, it's very common for both the employee and the business to be named in the lawsuit. The argument is that the employee was performing work for the company at the time, so the business shares some responsibility. That's exactly why hired and non-owned auto coverage exists. It's there to help protect the business when someone is driving a vehicle for the business that the business does not own, but they're doing it for business purposes. Now, that leads to the next question, and it's probably the one I get asked most often. If there's an accident, whose insurance actually pays first? Let's say one of your employees is running to the bank to make a deposit for the business. They're driving their own personal vehicle, and unfortunately, they cause a really serious accident. One of the first questions I hear is, whose insurance pays first? The answer is that the employee's personal auto insurance is going to respond first because it's their vehicle. If the damages stay within the limits of that personal auto insurance policy, that's probably where the claim ends. But what happens if the damages are much larger? Maybe there are multiple people injured. Maybe there's a lawsuit that exceeds the employee's personal liability limits. And remember, if the employee was driving on behalf of the business, there's a good chance the business gets named in that lawsuit too. That's where your hired and non-owned auto coverage comes into play. After the employee's personal auto insurance has responded, hired and non-owned auto helps protect the business against its own liability arising out of that accident. So don't think of this coverage as replacing the employee's insurance. Think of it as protecting the business when the business gets pulled into the claim. Now, that's still a relatively low level of exposure because these trips are usually occasional. Someone runs an errand every once in a while, visits a customer, or drives to the airport a few times each year. The next step up the risk ladder is when the business starts renting vehicles. This next level of hired and non-owned auto exposure is when your business starts renting vehicles. A common example is a salesperson who flies to another city, lands at the airport, and rents a car to visit customers. Another example is a business that needs to rent a pickup truck or a van for a short-term project. In those situations, you're no longer talking about someone driving their own personal vehicle. You're talking about a vehicle the business has hired or rented for its operations. That's where the hired portion of hired and non-owned auto comes in. There are really two coverages you should be thinking about. The first is liability coverage. That's there if the driver causes an accident and someone else is injured or their property is damaged. The second is physical damage coverage. That's what protects the rental vehicle itself if it's damaged in an accident, stolen, or suffers another covered loss. Now, whenever someone rents a vehicle, they're usually asked if they want to buy the insurance at the rental counter. A lot of people assume that's all they need, but for a business, it's usually better to have your own insurance program in place rather than making that decision every time someone picks up a rental car. It creates consistency and it helps ensure the business has the protection it expects whenever employees are renting vehicles for work. Now, for most businesses, these rentals are still pretty occasional. Maybe it's a few trips each year. Where I really start paying attention is when driving itself becomes part of the business model. This is where hired and unowned auto exposure really starts to increase. The biggest difference isn't whether someone is driving a personal vehicle, it's how much driving is happening as a part of their operation. Take a Meals on Wheels program, for example. Their entire mission depends on volunteers using their personal vehicles to deliver meals throughout the community. Or maybe it's a literacy program where volunteers drive to different libraries or schools to meet with students. Another good example is a court appointed special advocates program where volunteers are regularly driving to visit families, attend court hearings, and meet with children. In all of these situations, nothing has changed about who owns the vehicle. It's still someone's personal car. What's changed is the amount of exposure. Instead of someone making an occasional trip to the bank, now have dozens, maybe hundreds of trips happening every week. More drivers, more miles, more time on the road. And every one of those trips is another opportunity for an accident to occur. That's why I like to think about hired and non-owned auto as a spectrum. The farther your organization moves towards driving being a part of its everyday operation, the more important this coverage becomes. And at that point, the conversation really shifts. It's no longer about buying an insurance policy, it's also about managing the exposure. That means making sure people have valid driver's licenses, setting expectations for safe driving, having written driving policies, and periodically verifying that the people driving on your behalf are actually qualified to do so. Insurance is there to protect you after something goes wrong, but good risk management helps reduce the chances of something going wrong in the first place. The exact same idea applies on the hired vehicle side as well. The last situation I want to talk about is businesses that rely heavily on rented vehicles. This is something I see fairly often with seasonal organizations. Maybe a camp owns 2 vans during the year, but when summer arrives, they suddenly need 8. Instead of buying 6 more vehicles that will sit unused for most of the year, they simply rent them out for a couple months. I see the same thing with missions organizations, youth programs, and even some contractors that need extra trucks during their busy season. Again, the issue isn't that renting vehicles is bad. The issue is how dependent your operation becomes on those rented vehicles. If you're renting one vehicle once or twice a year, that's one level of exposure. If you're renting 6, 8, or 10 vehicles every summer because your operation depends on them, you've moved much farther along that spectrum we talked about earlier in the video. Every additional vehicle means more drivers, more miles, and more opportunities for accidents. As that dependence grows, making sure you have the right hired auto coverage, including both liability and physical damage coverage, becomes increasingly important. And that's really the way I'd encourage you to think about hired and non-owned auto. Don't ask yourself, do I have hired and non-owned auto coverage? Almost every business does. Instead, ask yourself, where am I on the spectrum? If an employee occasionally runs to the bank, your exposure is relatively small. If your organization depends on employees or volunteers driving every day, or your operations rely on fleets of rented vehicles during certain times of the year, that's a very different conversation. Understanding where your organization falls on that spectrum is the first step toward making sure your insurance program actually matches the way your business operates. And that's really the way I'd encourage you to think about hired and non-owned auto. And hired and non-owned auto is really just one piece of the puzzle. Because I can't tell you how many business owners I've met over the years who assumed their general liability policy covered almost everything until they had a claim and found out it didn't. So before you make assumptions about what your insurance does and does not cover, click right here in the next video. I'll break down general liability insurance, what it actually covers, the biggest gaps that catch business owners off guard, and how claims really work. I'll see you there.